Hello, and welcome to another episode of the Wadhwani Viewpoint podcast. My name is Manali Shah, and today's conversation is going to be all about startups. Joining us is Vinod Kumar, the founder of Naturally Yours, a healthy noodles and pasta brand. Vinod holds an MBA from the Cardiff Business School in the UK. He has over 14 years of experience in marketing, sales, and leading new business launches. Prior to this, he served in leadership positions at InnoServe, which has now been sold to Amazon. Vinod, welcome to the show and thank you so much for taking the time out to be here.
Thank you so much for having me here. It's a pleasure being here.
Great, let's get straight to the conversation. So, you studied in the UK and then you came back to India and you saw a gap in the market for organic, healthy noodles or healthy pasta, or healthy category basically. And you decided to launch Naturally Yours in 2010. So, how did you go about analyzing the gap in the market?
We did not launch the noodles and pasta thing in 2010. It is a very recent phenomenon. The noodles brand is just a 2.5-year-old brand, but in 2010 we launched as an organic store. Now the story behind the organic store is very interesting, actually, right? In fact, there are two motivations that actually triggered my desire to open an organic store, because in 2010 there was hardly any idea as such. One was when I was in Cardiff, I used to have organic food, and that's when I came in touch with organic food. And when I came back, there was hardly anything available in the Indian supermarkets, right? That was one. And second is I had a chance visit to an organic farm down south. And one of the things that I asked the farmer there is, hey, how do you sell your produce? How does the logistic work and all of that? Because I knew organic products sell pretty good in the UK at that time. This was back in 2010, and the person said that no, he sells it in the local market only, and he doesn't get any premium for that. And that's when the idea triggered that we could do something in this space where there were a lot of farmers like him who were doing a great job, but they did not have any market as such. So I said, why not have a bridge? And when I studied the entire thing, what I found out was there was a huge lack of awareness, right? And lack of awareness comes with talking to consumers. So we started in 2010 out of a small 100 square feet store in Bombay as an organic store, right? Our journey started out from that, and it evolved over the years from an organic store to an online store to an organic superfood brand, and now to our latest avatar in healthy noodles and pasta space. And every twist and turn has we learned a lot of lessons through all of these business formats. I would say these were literally new businesses. So the business is under the same name, but they were literally new businesses in new areas for us.
Right.
And every time we pivoted or we moved on to that, we learned huge amount of lessons. And yeah, so that's been the journey, and it's been 12 years now. And myself and my co-founder Priya, we have had one hell of a journey throughout this time, and we have enjoyed every bit of it.
Right, that's so interesting with so many changes as the brand has evolved and pivoted. And we can't wait to dive more into those changes and what drove those decisions. But before we get to that stage, so when you came back and you realized this gap in the market, right? You identified a gap in the market. So did you do any market gap analysis, or how did you go about it? And how did you estimate the market size at that point of time?
So there were a lot of reports, there were a lot of online reports, there were a lot of reports from different this thing that I read. But the best thing that we could do was actually speak to the actual end consumers and actual farmers. That is what we did. And fortunately, before we started, there was this huge conference which happens even now called BioFac. And that was a place where all buyers and sellers of organic come together every year, right? This year it is in Delhi. Coincidentally, that when we started, it was in Bombay, and it was like a huge boost for us because we could meet everybody, right from the farmers to the sellers to the brands to everyone in one single place. And we did tons of research over the 3-4 days that they were present here, and we got a lot of connections. And through that, we also went and met we visited, myself and Priya, we visited a lot of farms to understand how organic as such works. Because back in 2010, we were not only selling packaged food, we were also selling vegetables and fruits. We were doing same day deliveries. Same day delivery is a big thing today, right? But we
Right.
were doing, back in 2010, we were doing same day deliveries. In fact, in most of our locations where our stores were presented, we did within an hour delivery, right? So
Oh,
those are the
wow.
things that we did way back in 2010. And yeah, so the research primarily was from the research material that we got, but the biggest learnings that we had was from directly talking to the stakeholders.
Right.
If anybody is looking to start this thing, I think that's the best place to start from. Both sides, the buyer side and the seller side. If you once you have a look at it, you will understand if there is a reasonable kind of a demand. But at the end of the day, when you start the business is when you understand whether there is a demand or no.
Right.
But yeah, but your basic analysis you can be done, and we found that there was a reasonable demand here. That's why we went full in and we said, let's start something here.
Okay. So naturally, yours started as a physical store in Bombay and then moved to an online only model. So, what are the key factors that drive a change in business plan?
One of the key factors that, throughout the journey we have been bootstrapped, right? So there has been a huge emphasis for us to be profitable, to be cash positive. Now with a standalone store, if you had just one store, then yeah, we were profitable until we had one store. Once you start expanding into newer formats, into larger formats, into other kind of stores, the capital requirement is pretty high and not profitable, right? And that is something that we didn't, that as a model we did not like. Same thing happened
Okay.
with our online thing. Online initially we were profitable, but as the CAC starts pushing up, and since most of
Mhm.
the products we did not have, right, we were kind of an Amazon for all things good. There are a lot of stores that have come up now, but back in 2015 when we did that, we were pretty much all of that, right? And but unfortunately, again, the requirements for being profitable, you'll have to hold a lot of capital to be profitable till a very long time. Most of our online players even today are not profitable. so that
Right.
so that is a big question mark for us as a business model, and that is when we say, okay, we will give the model a solid 1-2 years, and if it still doesn't turn around in terms of profitability, in terms of the growth that we want to achieve, then we will kind of move on to something that makes sense for us business wise as well.
Okay. And how does a startup gear up and initiate such an important change in the business model?
For us, it came natural, right? In terms of so whenever we see a gap, we find as a business, you keep finding a lot of gaps, but it's a decision whether you want to go into that gap or not. And for us, the decision, like I told, is very was very it was very natural, right? Because if we are not profitable, we will not be able to meet our payrolls. If you're not profitable, if we will not be able to expand and all of those things, right? So that was our profitability and cash positivity for a bootstrap company. These are the two arms or two legs that you on walk on, right? If these are not present for a very long time, then that's a big problem. And that's when we say that, okay, we take a long term horizon, but then if this doesn't work out for a good 2 years and we don't see that horizon, that's when one should make a change, right? It doesn't come overnight, but the metrics are there, and then also as an entrepreneur who is into it, I think everybody has a solid gut feel that, hey, this is not going to work out, I better do something else, right? So that's when we started pivoting.
Right. So, on an average, would you say that 2 years is a good enough time to give something a shot and see whether it's shaping up the way you want it to?
Absolutely. At least from our framework, we look at a 2-year framework. One is some of the metrics is the growth. The business should have grown. The business should be profitable. The business should generate cash. That means basically it means that there is a certain market size. There is a big enough problem for you to solve that people are bothered
Correct.
about. And third, people are ready to pay for it, right? I'm purely talking from a very bootstrapped angle. I'm not talking from
Yeah,
an angle of investor or a VC funded or an angel funded company, because they have very different metrics that they look at. We are not that, so we are not looking at those kind of metrics, because most other they will look at a GMV and all of that. But that's there's no right or wrong way. But this is right
correct.
for us. That's why we do it.
Right, right. And in terms of changes, were there any organizational, structural changes that you made while you planned for this change?
There were no intentional changes as such, but
Mm-hmm.
people being people, a lot of people sometimes, who are with you in that journey, they don't believe it and then they leave you. Like, we had our entire team, when we shifted from our retail to our online space, our entire team resigned. The top team resigned because they didn't have faith that we could do anything there. But it did not happen in other consequently, but it did happen. So it is a very, very tough call that we had to do, but we had to do that, right? Because we found that that was a right for the company, and we found that as an organic store we could not survive as such in terms of the expenses that were happening, and we did not see growth or profitability there, right? So we that's why we
Right.
had to pivot.
Okay. And you mentioned that you've been bootstrapped. So naturally, yours has been bootstrapped through and through. And in my opinion, today there's a popular notion that to be a successful, profitable D2C brand, you do need funding, whether it's angel funding or, so on and so forth. Now, what would you say to that in the sense that how have you managed to sustain your business while being bootstrapped?
So a couple of things, right? So it's a conscious decision to be bootstrapped. Not saying that funded companies are bad or that path is wrong. That's completely an entrepreneur's call, right?
Yeah.
Now, being bootstrapped allowed us to do a lot of things that's right for our brand and for our customer. For example, it allowed us to focus in only one category. We will not, we will not do 10 different categories and see what works. We know this works. We go deep down. Like, for example, the range of noodles and pasta that we have, no other brand in this country, in the entire of India, has. Probably even in the US, no other brand has that kind of range. Now that has been developed. Those products have been developed not just basis of our whims and fancies. It has been developed basis our feedback from our customers. Customers came back and said,
Mm-hmm.
"Hey, we want. I love quinoa, but I'm not able to have quinoa. Why don't you make a quinoa noodles for us?" Or customers have come back and said, "Your noodles are great, but we want gluten-free based noodles. Can you make something in that space?" So it has come from that deep knowledge that we have had, and D2C allows us to do that. But as a brand, so we look our business as a brand, not a specific channel. Like, when you say D2C, you put yourself in a particular box saying that D2C. And to be
Mm-hmm.
honest, no brand in India can be D2C. A lot of people say that they're D2C, but no brand in India can survive as a D2C brand after a certain revenue level. Of course, they will have a certain revenue level, but beyond that, you cannot survive in the. You cannot just do online. The reason is Indian market is not yet that big for brands to become, let's say, a 500 crore brand or a 1,000 crore
Mm-hmm.
brand just online. They will have to have a huge mix of offline to come with online. Yeah, online you could lead online, and then you
Right.
could go offline, because that's exactly what we are doing, right?
Mm-hmm.
We have been online, and our online gives us huge amount of data in terms of consumer insights. Let's say, for
Right.
example, in North, you would typically think that Delhi is one of the biggest markets for our noodles and pasta, and that is what we thought. But here is a very interesting fact that Lucknow is one of the fastest growing region for us in terms of
Oh,
demand
wow.
for our noodles and pasta. So if I want to start, let's say, a distribution channel in North,
Right.
it should start in Lucknow, because that's
Correct.
where there is a huge demand growth coming. So these are the insights that a brand should use, and then move on to that. And being bootstrapped helped us to crack our, we know our unit economics. If somebody
Hmm.
says that, hey, this is the kind of margin I want, we can, myself and my co-founder, we can do a back of envelope calculation and straight away see whether it works for us or no. right? We don't need exhaustive Excel, or we don't need all of that, because we know exactly at what point we make money, at what point we do not make money, and we track that every single day, whether it is online or offline. So we know those numbers. So knowing those numbers are super important when you're bootstrapped, right? When you have a lot of funds in your pocket, and you are just going for growth, you may not necessarily need all of those things. You may not necessarily look at those things, but for us, those points are fundamentally very important as a brand, right? So that's what bootstrapping and being a brand in bootstrap, D2C, if you want to put it that way, makes that's how we look at it.
Wonderful. That's great insight, and something that possibly every entrepreneur who's looking to be bootstrapped should keep in mind. And any schemes that they should keep in mind while they are bootstrapped. Some ways to just keep the cash flow smooth, running smooth.
Oh, there are tons of it. First, a lot of time what happens is this happened with us also, right? When you bootstrap, you're thinking, "Arey, who will fund me? How will I fund my this growth? How will I grow on Amazon? How will I buy?" Let's say you have to pay in advance sometimes, right? Because nobody believes you. So how do I do that? There are tons of ways you can actually raise money in terms of debt, right? But for debt, primarily your balance sheet should be good, and your P&L should be good to a certain extent. In the sense that you should definitely be profitable, and
Right.
and your cash should be coming in, even if it is negative at the initial stages. It should be coming in. So those are the kind of businesses that get kind of debt fund. Now, one of the best way for D2C brands to raise is something called as a revenue based financing, RBF, right? In industry they call it RBF. So revenue based financing helps you to bridge that gap of growth and inventory funding, right? So basis your revenue, you get funded a certain amount of money. Let's say your revenue is 20 lakhs per month, you can get funding as much as 10 lakhs as loan,
Okay.
which you'll have to repay back in 7 months at about 12% rate. And
Okay.
that loan amount is taken away from your bank account every single day. So it is not like
Mm-hmm.
EMI जैसा चलता रहेगा वैसा नहीं. Every
Right.
single day 2,000, 3,000, and let's say your revenue goes up, you pay more. Your revenue comes down, you pay less. So your cash flow is
Mm-hmm.
also not significantly hurt, and that's a
Okay.
great discovery that we have had. The paperwork is not too much on something like that. You can easily
Mm-hmm.
get it, and this is all without any collateral.
Okay.
The second way you can raise is your typical ODCC. The third thing that you can do is
For
do an
Vinod,
MSME.
just to elaborate on
Yeah,
that
yeah, good.
for very young founders or aspiring founders who may not know these terms, if you can
Yeah.
just go into a little more detail.
Okay, so an OD is an overdraft account. Okay, overdraft or cash credit account. An OD account basically you will get with most government banks. You will get it. Private banks usually do not give it to a startup, right? If you're 1 year in, you will easily get an ODCC account with any of this the government banks under a lot of schemes. One of the schemes is called as CGTSME, right? So this is a government of India scheme specifically for MSME, right? That is the
Mm-hmm.
micro, small, medium enterprises. Now, under MSME, you will have to first get yourself registered in MSME, which takes about
Right.
like a couple of hours to get an MSME certificate. You can do it online yourself. We did it online ourselves, right?
Great.
You don't need to go to any agent or anything. You just need to go online. Within like half an hour, 45 minutes, you can get things done, max 2 hours, right? And once you have that, you go to any of the public sector bank, or you go to banks like IDBI and tell them that I need a loan under CGTS scheme. So the government of India gives up to 2 crores to small medium enterprises under this scheme, which is collateral free, and the interest rates are anywhere between 8 to 14%. Right?
Okay.
So this is a great thing that not many people know, but this is something that you could utilize in the initial stages, right? So again, this is a debt funding. So debt,
Right.
in my view, debt is always way cheaper than equity. A lot of times
Mm-hmm.
as founders, we say that यार मेरे equity का value क्या है, तो equity ले लो, give me money, but they do not explore this. Now, third way is something of an asset based, right? Let's say if you, or let's say a founder has worked for some years, and he has invested in shares and mutual funds and all of that, right? He can leverage those mutual funds or those shares, give it to banks as a collateral, and leverage that. Like for example, there's something called as LAS, right? Loan against shares. Let's
Mm-hmm.
say, and any bank will give you, right? Let's say an ICICI, HDFC, any of them will give
Right.
you at a very low interest rate. At an interest rate of 8 to 9%, you will get up to 20 lakhs under LAS, right? But you, if you have, that's an asset, underlining asset.
Right.
I think that is something that you should go for last if you do not have any of these things. But these
Right.
first two things, definitely you should explore and you should do something there.
Let's also talk about funding a little bit, in the same vein. So let's say a startup is looking to get funded. When is the right time?
See, there's no right time or this thing. You can get seed funding. There are plenty of angels, right?
Mm-hmm.
But I would say the best way to get funding is to start with some. Don't just go at an idea level. Especially, I'm when I'm talking about funding, I'm talking about the food space or the food and the beverage space, right?
Mm-hmm.
I have no idea about how fashion works. I have no idea about other categories,
Right.
because I have been through and through doing food businesses. I can tell you this for a fact that the great thing about food businesses, you can validate your idea very quickly, right? You can start your website, you can start do a bit of advertisement at a very minimal price. You can understand whether there is a market or no, and once you
Mm-hmm.
have that data, that will get you a lot of confidence when you go in front of an investor and say, hey, you know what, this is what I found, this is what I think is the future, and this is what I think I can grow my company to. And that's when an investor probably might also be interested. But it should be a big enough problem to solve. If it is a very niche problem, most investors are risk averse that way. But I feel it's a very counterintuitive thing, right? But most brands get built when they're always in a niche, and then they go on to become broad. No brands
Yeah.
start broad and then go on to do niche, right?
Right.
So that's something that when you're starting off and going to this thing, validate your idea with customers for
Mm-hmm.
sure, and know your numbers. Know your numbers through and through, because if you don't know your numbers, forget about the investor. You wouldn't be able to run your business beyond a certain point, right? So
Right.
you should know your numbers, especially in terms of what your margins are
Hmm.
and what are the variable costs and all of those things. You should definitely know those numbers.
Okay. And what are the checks and balances a startup should ensure while looking to raise funds? What should they have in place?
Uh, so don't dilute too much too fast, right? Try to do the initial first 6 months via bootstrapping, because the experience that you gain via bootstrapping will be phenomenally high than when you have money. Because when you have money, what happens is, right, you can easily throw money at problems. But when you're
Hmm.
bootstrapped, you are constrained for money every single day. So you have to think of ways in which you have to do with far lesser. Like for example, you have to probably get in tech, right? At a very early stage, you have
Yeah.
to get in tech, and that also tech which is not very expensive, and that boost your businesses. Like we have included so much tech in our business, and we are using all of those at a fraction of cost, which a competitor of which one of our competitors are using. They're spending tons of money on that. We're doing at a fraction of the size, right? One of our competitor, I know, they have spent probably 20-30x the money to get to the same revenue that we had, right? So those are the wrong things that you will do when you have money.
Mm-hmm.
So you raise a small round initially, validate your idea, and don't dilute too much too fast. Even if you're looking at great brands, if you want to have an example of huge brands like Boat, right? They did not raise huge amount of funds. Now the
Yeah.
founders have over 50% plus stake when they're going to IPO, and that's a huge success story that they will have. So
Right.
that's a founder first success story, not an investor first success story, right? As a founder, I will back founders only, but that's
Of
how
course.
yeah, I think that's how they should think if they're going for funding.
Great. This has been very, very informative. I'm sure this is new information for a lot of the young and aspiring founders that are tuning in. So it's going great. Thanks for this. And my next question is about the supply chain network that you've built. So naturally, yours works with hundreds of farmers, organic farmers. So how have you managed to build this supply chain network and sustain it?
So these are years and years of, I should give credit to my co-founder Priya here. She has built a very robust network of farmers, of processors, of all of that, right? And this again through networking, or speaking to one farmer, visiting their farm, looking at how they work, and all of that. So this was built one by one contact at a time, and we have nurtured those relationships over a period of time, over now at least 10 plus years now. And that's when we now practically right in between of a pandemic also, we never had any supply chain. We had like probably 20-30% supply chain issues, but 70% of our stock was always there. And that
Wow.
is because of this very strong network that Priya has built
Right.
across the country. And I think that is something a lot of people don't understand, that is kind of one of the backbones, right? You can get how much of a sale that you want, but if you don't
Right.
have a robust supply chain, then it
Correct.
is very, very difficult to service all of that.
Correct. So, what are the essentials or fundamentals you would say that you need to sustain or even grow a robust supply chain network like this?
Fundamental is that you need to be there are two, three things. One is you need to pay people on time, right? This is very basic, but a lot of people don't do. A lot of retailers don't do. That's why they get hammered. If I have to give an example of a great retailer who does that, is DMart, right? DMart
Okay.
pays most of its vendors within 7 days. Now, because of that, most of its suppliers within 7 days. Because of that, they get super priority service,
Right.
and they get great rates. Now,
Hmm.
if you go to DMart, they're never out of stock. But
Hmm.
other large format don't do that. They make suppliers run pillar to post, and
Okay.
because of which their businesses models are pretty weak. That as such. So we follow something very similar, right? Wherever a farmer or a partner says that, okay, these are my terms, we try to stick to that terms as much as possible. And there are rare occasions that we were not able to stick to those. I'll be honest with that. But we were upfront with them, saying that, hey, this is the issue. We have having some cash flow problems. People understand that, right? But you
Right.
need to be honest and through with understanding, explaining that to them. And I think they are more than happy to give you a bit leeway, and you pay all your debts, right? And same
Right.
thing with employees also. A lot of time,
Hmm.
people, I have seen, especially in the startups, where people don't pay on time, and
Yeah.
that is pretty horrendous to do that, because people are coming to you not only risking their career, but they're also need to be paid on time. If they are not
Yeah.
even paid on time, which is the most basic thing that you can do, then that's pretty bad. Like, in the last 13 years, I don't think we have not a single. I don't think, I'm very sure that we have not missed a single payday. And this is even during the pandemic, right? We never asked
Right.
anybody to
Yeah.
take a pay cut. We never asked
Wow.
anybody to leave. It is they, let's say some people just went to their villages and all of that, because of which they went away. But
Right.
otherwise, we never asked anybody to leave. In fact, we paid even people who did not come to our offices. So that's how we have built our organization. And we feel that those are the soft sides of things, right?
Right.
Everything on the supply side, everybody will tell you all kinds of gan. But even during the pandemic, we got priority supply. Even during the worst of the crises, you name the crisis, we have been through 2-3 economic crises, right?
Yeah.
So including the pandemic, we have always got priority supply. The reason is because of all the soft things that we did, right from paying people on time to speaking, to giving them respect and speaking, and
Yeah.
all of those things. Those things matter a lot. So yeah.
Yeah. And has word of mouth been an important aspect in growing the farmers groups or networks for you?
It is. It is. A lot of farmers, when we let's say they ask, they have a good network. Farmers as such, they have a good network of other farmers who do something very similar. So let's say if they do not have a particular product or the thing, they will refer us to somebody, someone else,
Okay.
and that's how slowly we have grown. But that is also a big part of it. But typically we have like 2 3 suppliers for one product, not more than that, because we want to give good sizable businesses for each one of them.
Okay. Okay, got it. You mentioned technology in one of your points earlier, so let's talk a little bit about technology. Naturally, yours has incorporated technology in a big way. You use a chatbot to accept orders via WhatsApp, and here I have to tell the all the people who are tuning in that I have tried it as well, and I've had a fantastic experience. It was super smooth. I was a little bit hesitant to just give it a shot, but it was completely seamless. At no point did I feel that my money will get stuck somewhere, or there won't be a way to prove that it's been paid, or those kind of doubts that people have while making a payment in a new payment method. But it was a fantastic experience, and at every step I got a message assuring me that that step was done and what's to be done next. So technology for scale is a common refrain in startups. So how should a startup actually go about selecting the right tools to enhance productivity or to meet their business operations?
So I'll tell you specific. I'll give you an example, right? So specifically with this WhatsApp thing, right? Now WhatsApp we had integrated it like right off the bat, like 2 3 months into the this thing. We did not have a chatbot, but we have kind of a very dumb kind of a chatbot, which would just say hi, hello, and do nothing apart from that, right? We said that a lot of we found through data we found out a lot of our consumers are shopping post our office hours, that our office hours are from 9 to 6 and they are shopping from
Right.
6 to 9, right? So we said these are the, and I used to sit and answer each one of them and it used to be very exhausting for me, right? And I said that this is not how I think we can scale. I cannot speak to like 10 people at the same time. Let's say I speak to one also, but I cannot speak to 10 people at the time. How do I track them, right? How do I speak to them? And as we were growing and as more and more customers were coming onto our site, we found it extremely difficult to talk to all of them. So that's when my co-founder Priya, she's also not only operations, she also takes care of the technology part in the company, and she said, hey, why not integrate chatbots, right? Nobody had heard of chatbots as such, but chatbot on WhatsApp. So very specific for us was chatbot on WhatsApp. The reason why we chose WhatsApp is a very high trust environment, right? In
Right.
India, the trust factor for online even today is very low, right? You have trust factor in very few online websites like Amazon or Flipkart or Big
Right.
Basket, but every other website the trust factor is low. Like what will happen to my money? Will
Yeah.
this go through? What if it gets rejected? Will I get back? I don't know who these guys are. So you need to put a platform which people are familiar with, people are comfortable with. That's when the chatbot took us 3 months to integrate, because we were very specific with the chatbot vendor that these are the questions that I want to ask. These are some very unnecessary questions that you are asking. I don't want all of those things. I want, if somebody says I want to pay here, they need to be able to pay here automatically, right? So all of those things. Somebody wants to track. We found one of those other questions, right? That a lot of people want to come and track, so let them track.
Right.
So those are the things that we said that we should build, and we should definitely have from a building of a trust point of view. Scale and all that is fine, that will come, but our entire goal was to build trust, right, and ease of use, and and a lot of customers like you have appreciated that because of the chatbot, it becomes very super easy for them to either order, or even for that matter, just converse and find out
Right.
what is the position of their delivery and all of that, right? and it allows us to track. Right now, let's say sometimes some occasions do happen when the chatbot is not able to understand, but now we have a place where everything gets recorded, and the customer service executive, when they come in the morning, they know that what to talk to the customer and how to resolve that. So there is a record of all of or everything that's happening.
Right.
So we see certain trends happening, and then we integrate again, try to integrate that into the chatbot. So it's an evolving process, but technology for us, like I said, has been, we try to integrate wherever possible, right? And we also try to put everything onto the cloud. Our billing system is entirely cloud based. Our technology is entirely cloud based. So let's say the reason why we did that is post pandemic we realized that, let's say tomorrow we have only one person coming to office or nobody is coming to
Correct.
office, we still need to be operational, we still need to be able to speak to customers, right?
Yeah.
How do we do
Yeah.
that? And that's why we just completely shifted everything to our billing system. All was very based on, traditional, it should be built on the system and all of those things. We shifted everything online now, and going forward we are only going to go more deep into that.
Great. So I'm sure you recommend the same thing to other startups that try and
Absolutely.
adopt these. Yeah.
Absolutely, because it makes your life super easy, right? As founder, there is only so many fires you can fight. So technology helps you to do two things. One, it helps you to, if you have processes, it helps you to keep those processes in line. And second is it makes life very easy for your customers and your employees, because they can do things in a very easy manner rather than doing like one work 10 times, right? You don't need to do all of
Right.
those things.
Right. And how should they go about deciding or selecting on the right kind of tech tools? Not everybody needs the same kind of tools. So how should they filter that through?
A very business centric, right?
Yeah.
But there are some common technologies that can be used. Like for example, your billing software can be online. There are so many softwares. The software we use is Zoho, right?
Yeah.
Zoho is an Indian company, but
Yeah.
they have built a fantastic software. Highly recommend Zoho books over any other software out there, and their customer service was also on the point, very quick. So that is something that you can use to take your billing online, and then over that you can add a lot of layers to it. Let's say, on if you want to build a website, you can use something like a Shopify. It's a great platform on which a lot of tech can be added on, right? And a lot of it can be done by you or your co-founder.
Right.
So
Right.
it's pretty easy to integrate these things, but then again, it is very specific to every business, and they will have to figure out what are the two things they'll have to figure out: whether the cost makes sense to me,
Yeah.
and how much of a difference it is going to make in my customer's life, and how easy it is going to be for my employees to use it. Right. So these are the three things you need to keep in mind. If these three things work out, then yeah, then it should be
Okay. Okay, super.
good.
And we've mentioned your co-founder Priya Prakash a few times. So
Yeah.
let's talk a little bit more about her. Your co-founder is also your spouse. So why is it a big advantage to work with somebody who you share a relationship with, a rapport, a sort of comfort zone?
It's a huge plus point right now. With Priya, she's not only my co-founder, she's also my best friend, right? Now it is super easy to converse with her. We of course we have our fights, we have our differences, we have all of that, but both of us are mature enough to understand what's what, and we kind of have bifurcated our things, our work as such, right? So that she handles operations, she handles the tech side of things, I handle sales, marketing, I handle that and the finance side of things. So we have very clearly bifurcated our roles so that we don't keep stepping on each other's toes. That's one thing that we did. And second, what happens is, let's say any large decision, we say we have a very simple format. On a whiteboard, we just put pros and cons. If the pros are more, or if the cons are more, then the decision is there on the whiteboard. And because she's also my wife, and for her, because I'm her husband, it becomes very easy for us to converse. Yeah, it becomes the difficulty for us is that how do we keep this talk out of the bedroom? How do we keep this talk 24 from not happening 24/7? That's the
Yeah.
difficult part, I would say. And it is very difficult for me as such to switch off. It is easy for Priya to switch off, but for me, I'm a very complicated person. That way, switching off becomes very difficult. She needs to keep. So we have a time off. Like she'll say, this is a time off. Let's only discuss our life outside business and kids.
Yeah.
Let's not discuss business now, so that we can think properly when we are in business.
With that, we come to an end of this episode of the Wadhwani Viewpoint podcast with Vinod Kumar, the founder of Naturally Yours. We've spoken about bootstrapping, pivoting, supply chain networks, using technology, and a whole lot more. Thank you once again for tuning in. My name is Manali Shah, and I'll see you in the next one.